financial technologies will make it easier for common people to have access to the formal financial system. You don't need banks anymore. You can make payment systems, payments using your mobile app. It provides an easier way for small entrepreneurs, small companies to get easy financing from lending platforms. They don't necessarily need to rely on commercial banks. It'll become a lot easier to transfer money across countries. So if a Mexican worker wants to send remittance from the US back to Mexico, or send money from Mexico to the US, it becomes a lot easier. All of this is good for households, but it also creates some challenges for traditional banks, and therefore it also creates some challenges for central banks. The question is whether money that is issued by central banks is going to be needed as much anymore, because now I can buy somebody a cup of coffee without using a peso note. I can just use an electronic payment system. A lot of these changes are going to make people much better off, but there are also some concerns that if the banks become less important, if there are other financial institutions that start playing a bigger role, whether there will be any risks to the financial system. There are two approaches that Latin American countries could potentially take. The first is a very passive approach, saying there are some benefits to issuing a central bank digital currency or promoting these financial innovations more broadly, but there are also some risks. So given that there are some risks, maybe it's better to wait and see what happens in the rest of the world. But the problem is that if you take that approach, there might be payment systems and infrastructures that are managed outside Latin America. The ability to control financial institutions that control those payment networks could be very limited. In addition, Latin America has very open capital accounts. There is a lot of capital flowing into and out of Latin America. And these digital forms of money and the financial innovations will make it much easier for capital to flow across national borders. And this creates certain risks for Latin America because, for instance, the monetary policy actions of the US Central Bank, the Federal Reserve, could lead to money coming into Latin America in very big amounts and going out, whoosh, in a very big amount as well. And these financial technologies will provide more channels for money to go in or out. There will be some risks, but it's better rather than taking a very passive approach to say, let's manage the benefits, let's manage the risks so policymakers can get the maximum benefits for Latin America while reducing the risks.